Welcome to the Working Moms of San Antonio podcast. We're your hosts, Erica Radis and Marie Lifschultz, a realtor and lender here in San Antonio, but most importantly, we're working moms just like you.
This podcast is all about creating a space where we can come together, share stories, and learn from each other. We love connecting with local moms in business, hearing about their journeys and how they're balancing it all. Because let's be honest, it's not always easy, but it's so worth it.
Before we dive into today's episode, we're excited to share some big news with you all.
Our business community and co-working memberships are officially open. Whether you're looking for a supportive community of moms in business or need a beautiful space to work and grow, we've got just what you need here at Working Moms of San Antonio. You can visit the link in our show notes or workingmomsofsanantonio.com/membership for more info.
Now, on to today's episode. Grab a cup of coffee, settle in, and let's get started.
Welcome to this week's episode of the Working Moms of San Antonio podcast. Today we have a guest on, Faith, and she is with Rocking Our Insurance, and we're going to talk about all things insurance. So I'm going to turn it over to her to introduce herself a little bit more and share a little bit about her business.
My name is Faith Rochester. I recently opened up Rocking Our Insurance. I was doing some other things for a while, working for other people.
Yeah.
And then I decided to work for myself, which
Nice.
is always
We love
good.
that.
Yeah, we do love that.
I
It's
love
kind of our
being my
gig.
own boss. It's great.
Yes.
What made you decide to open your own?
So I had started doing insurance in health and life specifically about 6.5 years ago, working for a company that's based out of Florida. And then I took a step back from that. I still did it a little bit on the side, but I was like, this whole 100% commission thing is kind of rough.
It's a little hard.
Yeah.
It's a little hard.
It sure is.
Especially because I had a newborn and other kids in school, and I was like, it's just rough.
Yeah.
So I took a step back and I became an adjuster with State Farm for a while. Like one of those people you call whenever you have a car accident.
Yeah.
And they decide, yeah, your car actually is broken and we're going to pay you to fix it. And I did that for about 2.5 years. And I was like, this is not for me. This whole working for somebody else thing is just not. So I talked to my husband a lot about it, and he was like, you should quit. He's like, just do it. Just quit.
Yeah.
Which is great. I love that in a husband.
Yes. My husband has also said that to me in the
You
past.
should just quit.
Yes, and it is one of my favorite qualities about him.
Yes, it's amazing. It's an amazing quality in a husband. And I was like,
Get that all, you guys?
right? Like, pay attention.
Yeah.
That's what you need to do. Just tell him, just quit. And he's been one of my biggest supporters, which is great. And so I did. I quit. And they were very shocked because they had just given me a raise, and they were like, "Are you sure?" And I was like, "I'm sure. I'm quitting." And so I quit, and I refocused back on insurance. I started reaching out to my old clients. I was like, "Hey guys, I'm still here. Like, been dabbling in it for the last 3 years, but we're going all in." And then I decided to go ahead and add not just health and life, but to become a full service agency.
Okay.
So I added in home and auto and commercial insurance as well.
Oh.
I also do pet insurance, not very often, but just throwing that out there.
That's a big thing right
So
now.
like
though.
really you do all the things.
all the
I do.
insurances.
I do. Most people hate insurance. I decided to be weird and make my life all about insurance. It's great.
Yeah.
Mm-hmm.
Yeah. Well, before we, started recording here, we mentioned, and this is so true, I don't understand how insurance works. I know that I pay for it. I know that we need health insurance. I know that we have life insurance. We have all the things. And do you feel like a lot of your job is educating people because they are like me and they really have no idea what they're even paying for?
Yes, definitely. Like I have clients come in and they're like, I'm 50 years old and I've had health insurance this whole time. What is a deductible? And then they're like, and then what's this out of pocket thing you keep talking about?
Yeah.
And so a lot of my conversation usually, especially the first conversation I have with the client, is discussing like, this is what this means. This is what it is. This is why we care about it.
Yeah.
And it's not just the premium that you're looking at every month, because you can be paying a lot of money for your premium every month, but your coverage actually isn't that great.
Oh, that's
that
interesting.
is very common. How important it is to have someone to sit down with you and talk with you and explain what the benefits are. Like, you don't get that from a 1-800 number.
No,
at all.
No, you don't.
Like, you might not even understand the people you're trying to talk to.
Yeah.
But having someone to talk with you that's local and knows your environment, your situation, and have someone hands-on is so important, not only in the insurance industry, but just in general, especially about things that you don't learn about in school. No one teaches you how to have insurance.
Yeah.
And
no
why
one has taught me.
No.
They should have a class on insurance in high school.
Yeah, just basic life skills. Like, hey, this is what it means, and what is a deductible? What's a high deductible? What is that? Like,
I know one of the things when I was an adjuster, people would call in and they'd be like, well, I have full coverage, so you should just pay for my car that's been totaled. And that's not how it works. We're not going to pay off your loan. They only pay what your car's actually worth. Mm-hmm. And if your loan is more than that, they're not going to cover that remaining balance. That's why you have to have gap insurance.
Well, and I was actually talking with a client just yesterday about that. And I was reviewing a credit report, and there was a large derogatory on their credit. And I asked what happened. Like, oh, we totaled the car, and the gap insurance didn't pay for it, so we went and bought another car, and it's there. The insurance should have covered it. I'm like, did you see what was like? What? Doesn't just do it because you said so. Like, you have to understand the coverage. So, but yeah, and so it's affecting his ability to purchase a home, because he has this large collection on his credit, because the gap insurance of whatever he thought he did not have in place.
Yeah.
So he's like, oh, well.
Well, because especially for auto insurance, people will, like, an adjuster, or not an adjuster, but a broker will say, hey, you have full coverage. And so they just assume that that's what that means, is that they'll pay off the car. What that actually means is that you have liability and comprehensive. Mm-hmm. So if you get in an accident and it's your fault, your insurance will cover to fix your car if it's fixable. That's what that means. It doesn't mean they're going to pay off your whole loan for you if the car is totaled. Unfortunately, it would be great if it did. But
how does it work if you get in an accident and it's not your fault?
So if you get in an accident and it's not your fault, hopefully the other person has insurance, which they're legally supposed to. But here in San Antonio specifically, there's a huge population here that's not covered. They're just not insured. Most of that has to do with car rates. Actually, that is driving up the premiums in San Antonio, specifically, but for all of Texas really, is because we have such a large population here that doesn't have coverage at all. So hopefully they have coverage. If they don't, and you only have liability, which is all the state minimum is liability, then your insurance company is not going to fix your car because it's not your fault.
Oh, that's interesting. Mm-hmm. That makes me feel like we need to look at our car insurance situation.
Absolutely.
Because for us, and my car's not very old, just a few years old, but we have paid it off now. And so, thankfully, I feel like my husband was like, maybe now we just need liability. But I feel like, no, maybe we do not.
No, I would think that you would still want full coverage, if that made the word. What's the word that you used?
You want to have comprehensive.
Just because it's your only vehicle, and if it gets totaled, what happens if you only have liability?
Then you don't have a car.
You don't have a car no more.
Yeah.
So unless you have the funds to self-insure and buy another car, then your insurance,
Well, no.
But no one explains that. Like, liability, they give you those options when you're looking, like, I just need something inexpensive. Oh, we'll just go liability. And you're like, oh, okay, great. And then you don't have a car in 2 months if someone hits you and they don't replace it, or...
Yeah. I mean, so technically what you could do is you could sue them personally.
Oh.
But the thing is if they don't have car insurance, they probably can't afford car insurance. They probably also can't afford to pay to replace your car.
Right, yeah.
Out of pocket.
You're just suing and there's nothing to want even.
So there would be a judgment there, but there's no money. You can't get blood from a stone.
Yeah.
It doesn't work that way.
Mom would say that.
Yeah.
An old soul, like.
But she used to say, like, you can't get blood from a turnip. Like,
you can't.
Yeah. It's true.
So yeah, I would definitely look at that. I know my husband's truck is old. It's like an 07, but he loves that thing. It's a Toyota. They run forever. And his is paid off completely. And they always, before I started doing auto insurance, they would be like, oh, well, we can just drop it down to liability. And I was like, absolutely not.
Yeah.
Not if he needs it. I mean, like,
No.
I would understand like a recreational truck, like something that you just had.
If it was like a farm truck and it was on the farm and that's all we drove it for, like you didn't need it for everyday use, sure, liability. But because all liability does is it just fixes the other person's car.
I see.
So it's not even, if you have liability and you get in an accident and it's your fault, they're not even going to fix your car. They're just going to fix the other person's.
Yeah. I mean, I feel like in our circumstance, we were shopping around for homeowners insurance, and we ended up going through USAA because they offered us a really good rate. And the guy was just like, but we can get a better rate if you just like throw your car situation in here. Yeah, and of course we were like, okay. And then really didn't look at it. I mean, how common do you feel like that is?
Very.
Yeah.
Very common. Bundling does usually get you a cheaper rate.
Yeah.
Which is great. I mean, plus there's only one bill to worry about instead of having to like make sure you do 2 every month.
Yeah.
But yeah, I would suggest everyone look at their car coverage because like I know for me, especially with being an adjuster for so long, I would always have, of course, the state minimum of liability.
Yeah.
Plus it's $30,000 for medical insurance and bodily injury and to cover property damage, which would be the other car. So if the other car is worth more than $30,000, they're also not going to pay more than that. That's it. So I also carry comprehensive. So if it's my fault, they'll fix it. And then I carry underinsured and uninsured. So if I get in an accident and they don't have coverage, my insurance company picks up the bill. If I get in an accident and my car is worth more than $30,000, which it's not right now, but if it was, and they were only carrying state minimums, their insurance company would only pay $30,000. And then if mine was say worth $36,000, my insurance company would pay the other $6,000 to fix my car.
Yeah. And most cars aren't $30,000. No, and you can't even get a used car.
Exactly.
Yeah. Like it's.
Mine's like $29,000 right now. Like it's super close. But when I bought it, it wasn't. It was more than that. And then I also carry PIP, which is extra personal injury protection, which will pay out no matter whose fault it is. They'll pay whatever you pick. Like I carry $10,000. And so that's just in case if I get in an accident, everyone in my vehicle gets $10,000 to pay towards medical bills. Now, it's not like a $10,000 check, but like if you end up taking an ambulance ride or going to the ER, that adds up real quick.
Sure.
Like you're going to meet that $10,000 and you turn those bills in and they reimburse you for those bills. So it's on top of the bodily injury that's already being paid out by whoever's vehicle is at fault.
Well, I got really scared one time. It was several years ago. It was a rainy day, and I remember I was headed somewhere, and I had ran to my car. Right, to get out of the rain. So I'd get, and then my glasses had gotten wet. So I was at a stoplight, and my glasses had water drops. So I took them off, and I was trying to dry them off, and I ended up dropping my glasses on the floorboard. So I leaned over, and my foot slipped off the brake, and I bumped the person in front of me. I'm like, oh my God, I'm so sorry. Like I was too close, or whatever. 6 months to a year later, they were still claiming medical and
stop.
Yes, I'm serious. It was a young guy. We pulled over. It was crazy. And I'm like, and they're like, hey, your insurance only went up to, I want to say we had 50,000 or whatever. They already met that amount. And they said if they go over, we were going to be like, we needed to get an attorney.
What were they saying was wrong
I don't know. It didn't get that far. The insurance company did their due diligence, fought it and whatever. But I'm like, what?
Yes.
Like I had no idea, and then they're trying to sell like another policy and this. I'm like, wait, I don't like knock on wood, I don't get on accidents, but I bumped like it was a bump. I wasn't even going like it just rolled forward.
That's wild.
But
that
it was
happens
something
all the
with
time.
The personal,
Really?
Injury, blah blah blah. I'm like, how could he? What did he do? He didn't get a new head. Like what happened? Like
he probably claimed like chiropractors and stuff because I don't know if you know this, but whenever you get in an accident, if you end up like going to a chiropractor or a massage therapist to like help ease the tension or whatever, you can turn those over to the bodily injury
I bet he went to
claim.
a spa
Yeah.
like lots of times.
Do you want to park behind me and bump into me?
It was so random. I mean, and I immediately, like, I'm so sorry. Like, I'm short, so I couldn't reach. Anyways, long story, but I wasn't even moving. Like, it just rolled forward. And it was a big truck. But yeah, so then I got really nervous because they started sending us attorney information. And thankfully, the insurance still did their part. And it never went past the amount. But I'm like, it would have been getting blood from a stone because there's no more money here.
Yeah.
You don't have $50,000 to just give away?
Nope, just don't have that. Not
How
happening.
nuts.
Yeah.
People are wild, man.
But I didn't know that you needed, like, I didn't know that if they got, like, your only insurance, you're capped. Like, if they go above that, and God forbid it's a big accident, you are liable for those things.
Yeah. So, like, I personally don't carry state minimums either because state minimum is $30,000. Do you know how fast it takes to do that? Like, and if you have, heaven forbid, you're on 410 and it's more than one car, it's $30,000 for the whole accident. It's not $30,000 per.
Oh, wow.
So, like, you get more
so
than one.
So they find you liable because you bump, and they bump down.
Yeah.
You're still responsible for
everybody's. So the 30,000 split between 4 cars doesn't go very far.
No, not in today's world at all.
Yeah. So I carry 100,000 for property and then 100,000 per person for bodily injury, just because it is more. But San Antonio is terrible drivers.
Yeah.
But is it like significantly more?
It's really not.
Yeah, I'm so curious about that.
Has anybody ever talked to you about, hey, you might want to have 50,000 per person?
Never.
Has
anyone ever done that to you?
No. Like, what does that
Never
mean?
in my life.
Another one that I see people they're like, no, I don't need the rental. Do you know how much rental cars cost?
Yeah.
It's like $60 a day to get a mini SUV, which is what I would have to have just to fit all of my children in.
Yeah, the
to
kids.
function, yeah.
Like, it doesn't work otherwise. And it's like $2 a month to have that $60 a day rental just covered for you.
Yeah, that convenience.
And you don't have to worry about it.
Yeah.
Like,
because you can't Uber a family sometimes. Like,
no.
it can work.
Like, I've got a 12-year-old, a 9-year-old, and a 4-year-old. My 4-year-old's still in a car seat. Like, it's a booster car seat, but that thing is heavy. And lugging it around is just not practical.
Yeah.
Plus, like, my oldest is in theater, and she does EA gaming, and she does livestock judging, and that's just her.
Yeah.
So she's got on, like, Tuesday through Thursday, she has theater until 5. And then Friday, she has EA game practice. And Monday, she has livestock judging practice. And then Saturdays, we either go to a gaming competition or we go to a livestock judging competition. And that's just her.
Yeah.
Yeah.
I mean, that's not even counting the other two.
It's not realistic to Uber to all those
No,
places.
you couldn't. You need
You'd
to
spend more than $60 a day Ubering all in those places.
Yeah.
So you definitely, like, it's worth it to just bite the bullet, pay the extra $2 a month, and just get the rental.
That's good advice. And
We
who
need to
knew?
have a class. We need to have a class on insurance.
I know. Well, as you know, Marie and I are in real estate, whether we want to be or not.
Can my husband please tell me to quit? Great.
Well, my husband told me to quit my real job to do this, so I don't think I'm going to get that again.
So much.
But
It's like a one-time offer.
and it happened like 12 years ago. So, but I want to talk about homeowners insurance.
Yes.
Okay.
I need to know the things. Why is it so high? And what is going on with homeowners insurance right now?
So there's a lot of things going on with homeowners insurance. One is we're having what feels to be a lot more natural disasters right now.
Yeah.
So they're having to pay out. The companies are they're having to pay out a lot more.
Mm-hmm.
And so they're raising rates on everybody to try to mitigate
the wealth.
their loss. Because I always think of insurance as a bet. The insurance company is betting that nothing is going to go wrong, and you're betting that it is.
Yeah.
And so every month that you lose the bet,
They're losing.
they get the money.
Yeah.
But whenever you win much bigger. And that's whether it's life insurance, health insurance, home, auto, doesn't really matter. It's a bet. And so right now they've been losing. So they're upping the bet because all of these hurricanes, the fires, the flooding, I mean, every time you turn on the news, you see random hail. And so they're having to pay out a lot more. So they're upping the cost on everybody for everything.
Yeah.
So I have to see that in my, right now, because I work with buyers, right? So when they're looking for shopping for a home, I have to know a lot of things up front in order for me to get some kind of idea because home insurance will price you out of a house.
Yes.
Right
now it will.
If it has an old roof or had a claim or something that apparently I'm now finding out, I can't generally, it's going to be X amount a year because I'm way off. If I don't know the home is older, whatever the case is. I'm having to have that information up front. And right now I'm seeing a lot of times buyers negotiating with the seller to, let's fix the roof because the roof is 10 years old. Because my insurance, I can't afford the home because my homeowner insurance quotes that I'm getting are so expensive because the roof is old.
Yeah.
So that's a big thing I'm assuming right now because of the hail and all the things that happens to a roof.
And also what type of roof you have is huge. Point, There's some companies that won't even do composite shingles. They're like, we're not going to.
Yes.
We won't
most of our roofs.
Yes.
Yes.
That's great.
No insurance for you.
Yeah.
Like when my mom was looking for homeowners insurance a couple months ago, I had to go to like 7 different companies because they were like, we don't like her roof. And I was like, I don't like her roof either, but
it's just the roof.
I think it literally just happened with your sister-in-law as well. I was lucky enough to help Faith's sister-in-law on the purchase of her home. And that house is 2 years old. Like that roof is new.
Yeah.
And the company that she would normally use was like, nope, not this roof. And I was like, what?
Yeah.
So she had to look around, I guess. But
yeah, because she was asking me about which company to go with. And I was like, you should probably go with this one. I was like, I can't write you the one.
Yeah.
Because they're captive. So captive means that they only sell one company's insurance.
Got it.
I am independent because I like offering more than one option for everything. Because I want to be able.
We like options.
I love options. I like being able to help people find the option that works best for them and not just, these are the 3 options I have. Pick which one kind of fits you. So that's why I'm independent on everything. Home, auto, health, life.
All the things.
All the things. If they're captive, I'm like, well, they're great, but I can't write it. I'll just tell you this is probably the one you should go with. And so I had told her, I was like, this is the one that I like. It's one of the ones that's coming in least expensive right now. And then she came back and she was like, yeah, I can't use them. They don't like my roof. So I was like, well.
That was the first time that had happened to me with a buyer where it was like a new roof. I've had buyers that have to, like you say, negotiate to put in because like the roof that currently is there is like not insurable. It's that old and damaged and whatever. But I've never had a new, like in good shape roof. People be like, nope.
And it was just because of the way it was made?
It was just like a basic roof and they wanted it to be, I don't know. I think that particular company maybe wanted it to be like dimensional shingles or something like that.
It's the shape of the shingle itself is what they don't like.
We gotta get a life, man. That should.
But okay, brand new roof.
But they just changed their policy about 9 months ago on that one, because before they would cover it.
Yeah.
Because I had mine with them for forever, and they were like, you'll be grandfathered in, like, but if you ever drop us, we won't take you back.
Yeah.
And I was like, okay, well.
And it changes. I would assume like in your industry and as in ours, rules change daily sometimes. Like,
yes.
They're like,
yes,
what? We did this last week. Why can't we do it this week? So trying to stay on top of guidelines and changes, and that takes someone having a relationship with your insurance person is very important.
I agree.
Like having that relationship. Hey, Faith, what's going on? Yeah, I need this because this has changed my life. And you're like, okay, that won't work anymore. We need to do this.
Yeah.
And this is why. And walking you through those steps. Because if not, then you're blindly just signing stuff and could be wasting money or not having the coverage that your family needs.
Yeah.
I know right now, not to be political,
Sure,
but there's a huge thing going on in Washington, D.C. right now about health insurance and ACA marketplace and the premium, like the subsidies. And you were talking about changes that are happening every day. So I get certified every single year so that I can sell health insurance plans with the marketplace. Like I have to get certified. I have to take a class It's like 3 hours long, and it's about all the new regulations that they have for that year. This year, they were like, here's your certification, but things might change between now and December, so we'll keep you updated. And any plans that you write between now and the end of December might have to do them again before January 1st.
Because we're now in the realm of open enrollment right now, right?
Yes, we
For
are.
health insurance, so that's coming around.
Yeah.
And,
Yes. So the subsidies are set to expire December 31st. So everyone we're doing open enrollment for January 1st and for all of next year. And people are coming back and their premiums are a lot higher this year. It's great. Having to have a lot of hard conversations with people. Because they're like, hey, last year with my subsidy, my insurance premium was like $20 and now it's like $400. What's going on?
Yeah.
It's a big difference.
And so we've been having to explore different options for people to make hard choices about what they're prioritizing, whether they want a lower premium or if they're okay with, like, do they want a lower deductible and a higher premium, or do they want a higher out-of-pocket maximum or a lower one? And so that, I think, is what's really important to work with a broker, because you can tell, like, people will tell me, like, hey, my kid has asthma. I know that we're going to go to the doctor this many times.
Multiple times, yeah.
There's a really good chance we could end up in the hospital at some point this year. And so for them, I'm like, okay, let's go ahead and put you on something that's going to cap those costs. And yeah, you may be paying a little bit more out of pocket every month, but if worst case scenario, if someone ends up in the hospital, you'll be capped on how much you actually are paying out of pocket.
But do you know how many people who don't understand that conversation or even know to have that? I had to sit down because my insurance is through an employer-based policy, right? And I move companies. It happens randomly. And I'm like, why is this so much more? Like, oh my goodness, this is like I'm making a whole lot less money because of what my insurance costs. So I had to sit down and really look at how often do I go to the doctor? What do we actually need? Do we have prescriptions that we need on a regular basis? And I had to decide a high deductible plan and say, okay, I need to put money aside on a regular basis, because if something was to happen, I know I'm ready for more out of pocket in general. Like, I know that, but I don't see the doctor on a regular basis. So a lower monthly premium made sense for our family. But my son now is going to need surgery. So I'm like, like, can we wait till next year so I can change my plan up? Like, but no one ever sits down and say, hey, these are things you need to think about. And so you can be prepared for these changes, because you're used to just like, oh, here's a copay and we're good and move on. And that's not how life works anymore.
No, it's really not. And then there are some plans on the marketplace that like have a lower monthly premium, but they don't have a set copay for doctor's visits. It's a percentage after deductible. Yeah. So if you have a $2,000 deductible, the insurance isn't going to pay anything until you've paid $2,000 out of pocket. And then after that, if you have that percentage after deductible, they're only going to pay, like, say it's 25% after deductible is your copay. You're going to be responsible for 25% of the doctor's bill until you've met your out-of-pocket maximum. And so it's not like you go to the doctor and it's $40. It's the whole thing until you've met your deductible. And then it's 25% of the whole thing until you've met your out-of-pocket maximum, which right now the out-of-pocket maximums are around anywhere between $8,000 to $10,000.
Well, so check out this conversation. So I called the doctor to make sure he was in my plan, right? The doctor is in my plan. The facility
is not
that he works at is not.
That's fun.
What?
What a fun turn of events.
And then I have to, so it's Aaron. Aaron's going to he needs jaw surgery, right? And we're planning it for the holidays. Yay for him. But, and so I had to like, okay, what about the anesthesiologist? What about, like, those are not in the plan. I'm like, what does that look like? So I'm like, okay, no, stop. We need to figure this out and regroup. Because that's not we can't afford, I cannot put up my house for sale in order to pay for a jaw surgery. Like, this is not, no. But, like, they get you because sometimes if you don't ask those questions, like, hey, what's covered, what's not, and so forth, then you go into thinking, okay, this is covered, and then you're going to walk out with a $40,000 bill because the random anesthesiologist wasn't in it.
Well, I find that we have insurance through the VA. I have ChampVA insurance. No one knows how to bill for it. Nobody.
No.
I go into every single doctor's office and I get charged like the most random amounts. They're like, this is your copay today. Like I see them look at this like binder. What's in the binder? I want to know what's in there. They look at a binder and they're kind of like doing this with their hand. And I'm like, okay. And I know this by now. I'm waiting for the shoe, right? Like to drop. And sometimes it's like, hey, it's, this amount of money. And I'm like, okay. But I'm like reluctant because I know I'm going to get billed later. So I'm like, erroneous amount of money. No one knows how to bill for it. It's a percentage of something. No one knows.
Yeah. And I mean,
that should be illegal.
It's crazy. Like my mom has Medicare because she's older, and which I do Medicare too. I do all things.
She does it all.
And so like I was not doing Medicare whenever she turned 65 back in 2017 because I was a baby. Not really, but I was in college. So she didn't know. She didn't talk to anyone about it. So she took Part A and Part B, and that was it. And she was like, I don't need Part D because it's just prescriptions and I don't have any. So
at that time.
So I'm not going to take it. So, well, down the road to last year in May, I made her go to the ER because she looked like she was dying. And come to find out, she had 3 blood clots in each lung.
Oh, no.
And after 2 weeks in the hospital and like having fluid drained out of her lungs and all kinds of stuff. And then she had a specialist for everything, like every body part that you have, an organ. She had a specialist for, and she's on 15 different prescriptions for things, and she doesn't have Part D insurance. And she was like, well, now I'm having to pay out of pocket for all of these things. And like one of them, Eliquis, is a prescription that I see a lot of my seniors on. And it's the only one. You can't get generic for it. That's it. It's a blood thinner. It's the best blood thinner on the market. You need it, especially if you've had blood clots or if you have heart problems or anything like that. And it's $800 a month. And that's it. So what I did for her and what I do for a lot of my seniors, if they end up not having coverage, and actually a lot of my clients too, is I'll tell them there's a website. It's called needymeds.org. And you can find, like you put in, it's really easy. You put in the prescription that you have and they find manufacturers programs and coupons for it. And then they can also give you a list of pharmacy prices in the area for cash prices. So with her, I managed to find the manufacturer has a program where if you don't have insurance, they'll give you, and like you do the whole approval process. They have, and she was able to get it for free. They would just mail it to her every month. So that was really nice.
That's amazing.
That is a huge. Yeah. I had no idea that prescriptions cost differently at different supply or places.
Yes.
CVS versus HEB versus Walgreens. Yes. Like I was paying for just medicine and just allergy medicine, like a monthly we were at CVS because at that time, years and years ago, my insurance said, hey, use CVS. That's where we like to, whatever. So we always did it. I thought they were the same. And then for some reason, I don't know why it got moved to, we had to move it to HEB. The price difference was huge.
Really?
Huge. Like we paid, I don't know, let's say $40 at CVS, nothing at HEB. Like why?
HEB has a great prescription program, to be honest.
I guess I thought it was the insurance that was dictating that information.
And it's not, I guess.
So they do play a part in it, but HEB, like they have different prices too. So like for my insurance that I have right now, my daughter's ADHD meds for the generic version at HEB is $15 because that's what our tier is for that. If I use the brand name, it's $75.
Yeah.
But if I went with just HEB's program that they have and didn't file it through insurance, her brand name prescription would only be $65.
Oh.
So I pay the lesser amount because I go to HEB. But if I went to Walgreens, where the non-insured price would be like $85, I would be paying $75.
So it just differs. I had no idea.
Yeah.
Like because I always thought it was insurance that was dictating the price of what you're paying.
Yeah. Like I said, we have stuff through the VA. I can't go to HEB. They make me go to Walmart.
Yeah. Oh.
They won't let me fill them over there.
Right.
But I'm telling you, like, you don't, until you are adulting, you don't really understand this. And even then, you don't, if no one sits down and talks to you about it, and you could be way overpaying or not, or under coverage or undercovered.
But this is the perfect example of what we talk about. Like, you don't, and we do this all the time on this podcast, you don't know what you don't know. Mm-hmm. And so it's like when you go to a mechanic and they're like, this is going to cost $1 bazillion. And you're like, I don't know. So here's all the money. I need this vehicle or whatever.
I call my dad.
Yeah. Well, I mean, I don't know. We never know. And so I'm just like, here. Yeah. And so, but I mean, if you don't know, like, you're not really looking out for it. So when insurance tells me this stuff costs this, I'm just like, okay. Yes. You know?
Well, military insurance, I would think it's also different just in general, right?
Mm-hmm.
Yeah, so it's a little different, but in general, like, you still have to have something. And, you know, and it would be nice to have someone to talk to, like, hey, these are the things that here are the hard things that I'm facing. Like, my prescriptions are way too much. I'm paying too much out of pocket for premiums monthly, and I don't go to the doctor. So then here's some options for you. Mm-hmm. Here's some ways to save some money. Yeah. And then when life changes, let's talk again next year. Yeah. And make sure that you're at least touching base with someone who you can build that relationship with them. Oh, I'm about to have a baby. Mm-hmm. Or I just found that I'm pregnant. What should I do with open enrollment? Yeah. Right. So, by the way, I'm not having a baby, but
I actually have conversations like that in moms groups all the time. Yeah. Where people are like, I don't know which plan to pick through my employer. And I'll be like, just call me. Yeah. Like, I know that I'm not going to sell you anything. I'm not going to write you a plan. You have employer insurance. Yeah. But if you need help explaining it, you could call me and I'll walk you through what everything means and which one would work better for you.
You know, because I've always had employer insurance, I didn't know if that, now that I guess talking it out loud, like, is that the best, how do I know that's the best choice without talking with you? Does that make sense? Like,
well, you wouldn't, but most likely it is.
Is that true? If you have stuff that you can go through work, you should go through work more often than not?
So the way insurance works, because you know how the government is, things aren't always the best when they get involved. But so if you wanted to go through the marketplace for insurance, you have to, and you're offered employer insurance, there's a couple of things that we have to do. The employer plan has to be more than 10% of your income, or it's considered affordable and you don't qualify for marketplace insurance.
Oh, interesting.
Which 10% of your income,
that's a lot,
is not my definition of affordable, but that's the government's definition of affordable.
That is not affordable. That's a lot of money.
So if you decided not to do that.
Is that gross?
Yes.
That's a lot of money.
It's your taxable income. So gross. Unless you own your own business and you write a bunch of stuff off. The other option that you have is to do individual off-marketplace insurance, which the state of Texas right now has it to where the short-term plans, they want you to do it 4 months at a time. But the problem is if you do it 4 months at a time and something happens, like in your 4th month of having insurance, then it would be considered a pre-existing condition when you do the next 4 months, and they're not going to cover it. Whereas the marketplace, it would be covered.
My brain is doing something weird right now. It's trying to think about this, which is, it shouldn't be. So you do this 4 months at a time, and during that 4 months, you discover some illness that you have. Mm-hmm. Then you have to re-up, and when you re-up, they're like, not this thing that you know you have about now.
Yes.
What?
Why would you want to re-up every 4 months? That's awful.
Yeah.
Because that is what the government has us doing right now. It's great. The state of Texas legislatures don't know much about insurance.
Yeah.
And
I don't think they know a lot about anything.
Well, I wasn't going to say that, but I agree with you. But they don't know a lot about insurance, but they like to make laws about insurance. So now we have this problem.
They do that in our industry too.
They sure do.
Yeah, it's great. So if you have employer insurance and it does meet the affordability clause, it's probably going to be better for you.
Got it.
If it doesn't meet the affordability clause and it's more than 10% of your income, then you would qualify for marketplace insurance, and we could go from there.
Got it.
Mostly what I put people on short-term plans with is like I had a client just this last week where she called in and her income was more, she wouldn't be getting any subsidy for the marketplace. So for her and her daughter, a silver plan was going to be $1,100 on the marketplace
a month
because they have to pay full price because they're not getting a subsidy,
Mm.
which is not in any way affordable. So for her, because they don't go to the doctor a lot, they don't have any pre-existing conditions. I talked to her and I was like, this is an option. You can have this coverage. It's actually about the same as what you get on the marketplace, but it would only be about $400 a month instead of $1,100. I was like, it's an option. It's up to you. I will write whichever one you want me to write because I get paid either way.
Yeah.
Yeah. And so she ended up going off marketplace. So I do present those options to people and let them know. But I was like, but if something happens, they're not going to cover the pre-existing. So it's one of those things. Yeah, it's a gamble.
So if you like Vegas, try insurance.
But yeah, I would always suggest people talk to a broker about anything because there's a lot of ins and outs that if you don't know, you don't know. Like before I started doing insurance, I was like, I don't know.
Yeah.
Same in our industry. We didn't do what we do. Would have no clue how it works. It's just trying to find those trusted individuals that you feel comfortable with and sharing and someone to stay on top of you. Like, hey, you're it's open enrollment. What's changed? Let's talk about your options.
Yeah.
You know?
Well, it's like I had a client the other day and he was like, hey, it's that time again. And I was like, yeah, it is. Because he texted me. Because
Sure
you can text me.
We love texting.
I love texting. A lot of my clients love texting. It's a millennial thing, I think. Everyone's like, I don't want to talk on the phone. And I was like, fine. You can text me.
I love talking on the phone.
So, like, I get clients that'll reach out on Facebook Messenger or via text. And I'm fine with that. They can do that. But he was like, hey, let's renew. And I was like, okay, cool. And he was like, I like my plan. And I was like, all right, has anything changed? And he was like, no. And I was like,
got married. No.
like, that's where we're going with this. I was like, okay, so still you and your wife and your 4 kids, and you still live at this address and you still have this income. And he was like, oh, well, my wife got a job. And I was like, okay, how much does she make? That's a change. Like when you said no changes, that's a change. And he was like, she makes $1,200 a month. Okay, cool. And then I was like, any other changes? And he was like, I got a raise. And I was like, also an income change. I need to know about that. And he was like, and we had a baby. And I was like, that's a household size change. I need to know about that. And he was like, oh, and we moved. And I was like, also a change.
Yeah.
Yes. And then I was like, okay. So I put all these changes in. I was like, if you want to keep your plan, it's going to go up $300 a month. And he was like, maybe we should call. And I was like, that maybe, yeah. And he ended up changing plans, but he was still covered. So it worked out. But yeah, I don't ever trust those. No, nothing changed.
They lie.
He had all the changes.
He had all the changes. I have noticed, though, that when it's moms and I say I have anything changed, they'll be like, oh, well, I moved 1 block over. And I'm like, okay, well, that works. It's not going to really affect anything because you're still in the same zip code. But thank you for telling me. Whereas when I talk to the husbands, they're like, yeah, no changes. And it's all the changes.
Tell me why your zip code matters. What does that mean?
So specifically on the marketplace, the zip code, there's different plans that are offered for different zip codes. So like it has to do a lot with network. So like even here in San Antonio, the zip codes, we pretty much have the same plans. We got Oscar, Ambetter, Aetna left the marketplace this year, so they're not there. United, Blue Cross Blue Shield. But if you go to, say, Lavernia or Pleasanton, you get Oscar and Blue Cross Blue Shield. And that's it. The other ones aren't there because the hospitals and doctors down there aren't in network. And then, like, if you go to Corpus, Christus is going to be one of the major carriers down there. And then while they do have plans in San Antonio, they're not affordable and they don't have a lot of coverage. Whereas if you go to Dallas, Baylor Scott and White is going to be one of the bigger ones, and they have nothing here in San Antonio.
Yeah. How interesting.
Like speaking another language.
Yeah.
You're like, what? But yes.
So even though you're still in the state of Texas, if you move, even if it's not that far, I mean, Pleasanton, I grew up in Pleasanton. It's 30 minutes away.
Sure.
Like, it doesn't
it
feel like that big of a difference, but it does.
Makes a change. Yeah.
Well, this has been so interesting.
It's
opened my eyes to what I don't know, which is everything.
Everything about insurance we have no clue.
Yeah.
There's so much more to go into.
Yes, for sure. Well, as we kind of wind up, I usually like to have our guests share how people can get a hold of you so you can educate them on all of these things that we talked about today.
So there's a couple of different ways to get a hold of me. I do have a website. It's called rockingorinsurance.com. Just all one big word, no dashes nor anything. And then I also have a Facebook page, Rocking Our Insurance. And my phone number is the easiest way to get a hold of me.
She likes text.
I do. Text works. You could text. You can call me. And then my phone number is 830-570-2323.
Perfect. Well, we will put all of that in the show notes. And thank you so much for being on and educating about insurance. Like I said, I just knew
and
nothing.
let us know how much we really don't know.
Yeah, which is important. But thank you for being here.
Yeah, of course. And even if it's not me, you should talk to a broker and get more information about stuff just to make sure that you're actually as covered as you think you are.
It's a good point.
For sure.
We tell people.
Good advice, yeah. And I'll also thank our listeners for tuning into this week's episode, and we'll catch you next week.
See you guys next week.
Thanks so much for tuning into this episode of the Working Moms of San Antonio podcast. We hope you loved today's chat and found a little inspiration to take with you into your week. If you have a podcast topic suggestion or a question you'd love for us to cover, definitely send us an email at hello@workingmomsofsanantonio.com. We'd love to hear from you. And until next time, see you in the community.